To take this opportunity and welcome everybody back to the Independent Investor channel for the Friday night live stream. It is 9 o'clock for the fastest 60 minutes on YouTube. My name's Ryan. Channel was started about 5 years ago up in New York City. So I'd like you to do me a favor. If you take a few moments and think about what happened 20 years ago, certainly worth acknowledging there. The channel will always have a special place in the heart of New York City, no doubt about it. I have been there to ground zero. It's very sobering experience. I do recommend that anybody who has the chance to visit absolutely goes and pays respect to what happened that day. And just take a moment this weekend to, in your own way, take a little time to reflect on how precious life is. Speaks to somewhat of the element about why we do what we do on a weekly basis specific to personal finance. But I always take an extra special step and segue the investing opportunity and the opportunities that exist therein to acknowledge that it is just a supplement to your life. It absolutely is. To get this stuff under control, help you put some things into perspective. Really help to codify the 5 elements that we're going to talk about tonight. This is going to be super special. If you're first time to the Independent Investor channel, I've been doing this for eons and eons. I've no script, too much script in our life, right? I talk from the heart. It's my opportunity to come on for 60 quick minutes and talk personal finance, which is indeed my very favorite topic. And some very devout community members, all good being one of those. A special shout out to her. Thank you for making your way onto the show tonight. The world needs more people like this. How else can I say it? And it's just a pleasure to have the opportunity to bring kind folks like All Good, who's number one in the gallery. If you can beat All Good into the group, man, just speaks to the devotion and compassion that I think she resonates with. And she understands what I'm trying to do here. Quality over quantity. There's no doubt about it. There's absolutely some fantastic quality people in the group here. Second of which, Bob Wright is one of those people. It's great to see you, Bob. And yes, indeed, it is the fastest 60 minutes. We will stay on target tonight. And while I've got the attention of the would-be patrons that'll kick into the live stream and quickly kick off because I've bored the hell out of you after 5 minutes of your life, there's certainly probably a lot more important things that you could be doing with your life than listening to me ramble on for 60 minutes about personal finance and budget, which is not everybody's favorite topic. I totally understand. But next week, I will be catching Friday Night Lights. I will be watching my favorite high school football team. I'll be taking the little fella. You guys that don't follow me on Instagram, you need to kick over, follow the channel on there. I do unique posts on there, a little bit more personal nature. And I expect you to come into the Independent Investor channel because you like me, okay? There's certain avenues of the show now that we do, the live stream being one of those. I have been rolling out a pretty good amount of promotional content. Really amazing how when you start a project like this, it evolves to a place where you never thought possible. And in some capacities, it's doing just that. I think I would have loved if I would have just been able to come on and talk personal finance and budget and see the channel explode and people resonate with the idea of that. The damnable misery of that is I don't think a lot of people really relate with being told what to do. And I think in a lot of capacities, I think they should. I think a lot of people have barriers to entry with regard to personal finance. And I think it really does prohibit a lot of people from opening themselves up and really listening to a message like mine, especially over a conduit that like YouTube, which is, interesting in and of itself, entertaining in many capacities. I don't try to come on and entertain you. I try to come on and give you the goods. I'm going to give you the first pillar right now. The first pillar that most people don't want you to know about, and when I say most people, I say the system, I say the financial planning institutions, I will say the pundits, I will say the Jim Cramers of the world, although he does do a fairly good job. The only one I might add that actually advocates for this as an option, but is quick to say that, statistics show that most people do in fact fail out self-directed investing. That is the number one pillar. It's the pillar and basis of the independent investor channel. It circles around the idea of taking control of your own money. I've been with 4 financial planners in my career, and I know there's a lot of people out there that have been as well. I think if you can imagine standing at an oasis and looking out over the desert and having an open landscape, really a blank palette to paint whatever picture makes sense for you in your financial picture, that is what self-directed investing is all about. Conversely, in the financial planning institution, there's so much structure and there's so many rules to abide by, and you end up paying for each and every one of those levels of access in that structure. And unfortunately, a lot of people do gravitate toward that way because they think that it is the only way. And I think for some people out there, it can certainly be better than not investing, right? Seeking out that structure, that element of really, I don't know squat about investing and I'm okay with that. So I want to put my money in the hands of a money professional and have them manage that. I've really gone beyond a point of saying that somebody is wrong or right by doing that. I just really think that people need to educate themselves up on the implication of that decision and how costly it can be over the long term. And if I've just perked your curiosity, okay, then I highly encourage you to go into the compounding calculator, add that 3% management fee that they do so well in hiding from you, or they may, in fact, disclose that to you. But a lot of people, I don't think, are trained to understand the impact of that 3% over your money as an overhang or as an anchor, prohibiting those dollars from growing to maximum potential into the future. So the idea of self-directed investing really is, once it's internalized the correct way, is the ability to resonate with the idea of taking control of your own money and becoming an empowered investor. An empowered investor is one that can look at that open landscape and not just completely go on tilt and lose your craze and think, okay, I want to be a self-directed investor, but I don't want to self-assess, and I don't want to apply any type of personal rules or personal ground rules or personal barriers or certain rules that make sense as you evolve as a self-directed investor, okay? It's extremely powerful. And the secret that exists therein is the secret of direct connecting yourself to the stock market. The shares of Apple computers that's owned by you as an individual are the very same Apple computer shares that the big hedge funds, the big institutional investors, the vanguards of the world, the top 10 of the S&P 500. This is not a hybrid version of Apple shares that you as a retail investor hold with your small block of 10 shares of Apple computers. Those are very, very real shares of a company that gives you exposure on an individual self-directed investor nature, right? You don't own them through the structure that I talk about, and you end up paying for that access that I contend you can win yourself with just a little bit of wherewithal, a little bit of education, and mostly a lot of discipline. Okay. So self-directed investing, that's my soapbox right there for you guys. And it is the number one pillar of the independent investor channel. Differs from some of the other channels out there that hopefully do speak along these lines. For you guys that are out there that have the 401k programs, those are an example of something that a lot of people feel more comfortable with because they are sponsored by a larger organization, and the employer has vetted that and has forwarded that to you as an employer, to you as the employee. And I think a lot of people are more comfortable with that because it's kind of a out of sight, out of mind type of application. Whereas self-directed investing really does require you to really keep the opportunity in a box and make some very, very simple strategic decisions. They are simple. You can do it. Okay. And the benefits that exist with self-directed investing are that they are unarguably the best course of action that you can take if indeed your bottom line goal is money. If you just want to invest and you want to have the peace of mind, then your bottom dollar might be compromised over the long term by giving up that freedom of being a self-directed investor, and opting for the financial planners program. You're going to see a real divergence in your options as well if you do opt for the planning route, the financial planning institution route, in that you're going to find that perhaps the lack of choices that you actually do have with that route can actually be somewhat of a turnoff. And I think to the educated investor, we hail to the educated investor there, and we support your decision. We do. I, for a while there, got into a funk of talking about other styles and other investing recommendations. There's one specifically right now on YouTube that's just bashing on all the big channels. Seems like an interesting guy enough, maybe a life of a party type of a guy. Whoa, whoa! I'm not really sure how productive that is. I'll let you be the judge. I really will. But I'm off really looking at what other people's programs bring to bear, because I've come to the determination of this. What might be good for somebody else may not be good for me. And I think all is fair in love and war for you guys, in that what might be good for me might not be good for you either. Okay. Now, there's certain elements, and I try to do it all. I just scaled back on my opportunity to pursue cryptocurrency in the Roth IRA. I just disclosed that in my private WhatsApp group. It might not be for me. I tried to let it internalize. I tried to let it go. It made sense to me to do what it is that I was doing, and I had the account free. Here's the thing. It might have worked for me with the free account, but I cannot bring myself to recommend that going forward. So I think we're going to go ahead and dissolve away the iTrust Capital account that I disclosed to you guys. I've had it active now for about 2 or 3 months or so. Ironically, it's the only account that's up. I actually sold Monday night right before the flash crash in Bitcoin Tuesday morning. So I was like, look at me, lucky. I don't really want to rely on luck with my application. I'd really rather rely on my ability as a value investor. And sometimes I really have to stay true on my conviction and really look to avoid temptation in the marketplace. There's some discussion in the thread here talking about buying the dip. I would like to challenge that sentiment. There is no dip. I think you guys are watching too much TV. Okay. Markets are at all-time highs. I know the market was down 5 days straight. Means nothing. Okay. Even the gentleman that's spraying a lot of hate through YouTube, admittedly, has been a bogglehead since 2012. Okay. Congratulations. You've just put some dollars to work in the greatest bull market. But for us investors that have been around for a while, we still remember how volatile the stock market can be. And it absolutely can be volatile. Now, what do we do about it? Okay. What we do about it is we set up a well-laid plan for the future, establish those good passive buckets. I know some of you guys are talking about DCAing this opportunity. I DCA the market every month in the tune of a few $1,000. I do 20% of my income right to my investments right away. And that's a strategy that will continue no matter what the market is doing. In 2021, I've done very little aggressive buying on the market, and I've done a whole lot of remaining with my conviction on the companies that I have bought and owned for multiple years now. There hasn't been a whole lot of additional stock picks per se that have been added to the portfolio outside of some of the very, very unique pockets of value that I see. So with that, guys, this is going to be super special. We are going to aim for 60 minutes tonight as I walk through the top 5. I've already given you one. We've got 4 more to go. The secrets that nobody wants you to know in the investing arena. I'm here to kick over rocks for you. Try to seek out that extra special spark for you in your journey towards your empowerment and your own personal finance journey, guys. So stick around. Be with you in a moment. No! Just kidding. Just kidding. You don't get a lot of that activity on the Independent Investor channel. I laugh my ass off actually when I think he seems like a pretty cool guy. Needs to be careful with spraying a bunch of hate. He's going to have the entire YouTube audience hating him. And I went down that rabbit hole just for a short time, and I caught myself and I said, you know what? I'm better than that. I felt terrible doing it. So I'm not just sure if it's a conscious choice to give away all integrity, to stoop to those levels. It really just speaks on how much time you spend paying attention to others. And I think that's really the fallacy in the whole deal. And I think it's unfortunate. I really do. I think, unfortunately, it misleads a lot of people. Whereas I would say that if you're tuning into my message just to follow blindly what it is that I do, you missed the entire intent of becoming a self-directed investor. Self-directed means you're in charge, not me. You can come in here, get some motivation from the channel. Absolutely. I deliver on the goods every single week. I do believe in that. And I do share my story with you guys and show you the ins and outs of what it means to be a self-directed investor, what it means to fluctuate in the market up and down. We had a pretty bad week this week. All told, down about $6,000 the total portfolio. I was surprised. It really felt a lot worse than that when I was going through the week this week. Let's jump right in here, man, and do some portfolio reviews here. This fell back below 100. Really, Hyliion was the anchor here in the portfolio. Really just very disappointed in the progress of this trade. It's, my conviction has never been stronger, but the stock is just not responding. And I'm pretty disappointed. I'm getting a little impatient. You guys need to understand I've owned this company all the way up, all the way down, sold for a fairly small $6,000 profit on the way down. Really, it was a salvage maneuver. I hated to do it, but I've been accumulating the position here, and my bullish conviction has not changed. And right now, it boggles my mind when we come out of a trade show and the stock drops the way that it does. Very disheartening to see a company like Hyliion, ring the bell and, go up 25%. Like, what is that about? And that's really just speaks to an agreement that I do have with the bogglehead philosophy in buying index funds. And I think you'll find that a lot of my wealth is tied up in passive investments, just like I think for the majority of you guys should be as well. We'll talk about that in the second pillar of what nobody wants you to know in investing, and that is the very strategy that you select here. But down week over week. This was very rare that we're down week over week, but we were down across the board, and down about 6,000 total portfolio. But here's where we are. And like I said, not a whole lot of additions, not a lot of liquidations. We're holding strong on these names here. Not a whole lot to report here. Just kind of a crushing year for me. 2021 has just not been good. It's just not been good. We've made money on other fronts, but the stock portfolio, I've really leaned against it to be a stock investor. I've really just had to sit back on my haunches, have the conviction that I need to understand the companies that I own, which I do. I'm fine. It's just really disappointing to see the hyper growth really turn on its ear the way that it has. And some real ill-advised. I had the Matterport options, and I went ahead and bought back the premium, or sold to close out that position. Stock skyrockets 40%, over the next couple of days, and it's like, boy, I'm maybe it's just it speaks to how difficult it is in a stock picker's market. But it's like, man, I know for a second if I sold 5,000 shares of Hyliion, the stock would go up 100% on Monday, and it's somewhat of the deliberation that I go through. And it's like, man, lucky me. You look at a stock chart on this, it's just flatlined at the $10 mark here at 850 or so. Just will not move. And I don't know if it's the 20% share float that is being shorted right now. I don't know if it's manipulation. I don't know if it's big influences that are keeping the stock down. The product works. But for whatever reason, the stock really just is in extreme oversold territory by fundamental and technical means. And just to give you some insight there on really how tricky and what level of risk tolerance is necessary for that level of aggressive investing, I fail to see that 𝗖𝐋𝐈𝖖𝐊 is a concept company. I will not buy into that, nor will I deem it a speculative company either. I understand it's pre-revenue, but if you're going to bet that the company's not going to make revenue into the future, I think that takes more imagination than what I have with my bullish thesis to actually look like we're getting in on a company on the ground floor. But we'll see. I think the next 6 months to 12 months will be a telling time frame, and we'll just have to see how things transcend. Too much positive news in 2021, but like a lot of my 2021 positions, it's been a real dog, and I still look at the stock market as being close to all-time highs. I don't share in the sentiment that we're in some sort of a pullback right now. I just don't. I think the market's all-time highs, and I think there's lots of downside potential there. Do I think it's going to happen? No, I don't. I really don't. I'm in agreement with Kyle. Passive income's in the group here, and Kyle says, hey, I don't think we'll get that because me and him and the savvy investors understand that if we did get a dip like that, you bet your ass I'd be buying. Right now, sitting on about 10% cash anyway, $70,000 in cash. You know, I always have a pretty good cash buffer, probably much richer of a cash position than any of the thinking heads would agree, but or deem appropriate for an investor my age. I don't care. It's part of the tailorability of the self-directed investor program that I do. I'll make it up on the back end. I'm good. All right. So next portfolio is Roth 2. This is mine. A little bit of churn here. All the names I want to be in. You know, this one is anchored by the passive investment in the triple Qs, as well as some single stock value and a little bit of and a pretty good healthy mix of growth. But yeah, we've just fell on a little bit of bad luck here, a little bit with the investing thesis. I'm not going to panic my way off of the stock market here. I'm going to hold true, and I'm going to be what I consider to be a really, really funny thing, an investor. You should check into it. It's amazing. And here's the M1 portfolio. The passive portfolio's dipped marginally week over week a little bit here. 17,866. These are the sector specialty ETFs that I roll out here. Here's the dividend growth portfolio. Was staring down that 20, backed off about $300 anyway. No problem. I'm waiting on this sucker. This thing comes off 10%, 20% you guys are talking about? That's funny. I'll be throwing a $10,000 bill into this account. Yeah, but in the meantime, I just continue to dollar cost average this to kind of fight what's going on here. I did increase my contribution from $50 to $100 every couple weeks. These are some of the strategic moves that you guys could do as well to kind of combat this and buy into the weakness. Now that I do like. I'm not going to agree that this is somehow entering into a bear market or a recession. Like freak, guys, this one freaking week in the market, and it was down pretty handily every single day. Yeah, a week doesn't make a market, but we'll see what happens. The thrift savings plans come off a touch. The spark line there again took a little bit of retracement in this portfolio, but this is one that I fund pretty heavy. This is up close to $1,000 a month. Very proud of this. It's money that I don't need, so it flows in here for you guys that have the 401k. This is the 401k equivalent for me as a military member. Okay. And then the calls really kind of shifted off of the options right now, looking to kind of fortify the portfolio a little bit, take a little bit of risk off the table. I think we are in a risk, a deleveraging type of position here. In other words, would I be throwing money at this market hand over fist? No, I wouldn't. So, and that's the thing is when I have people coming on and they're like, Bogglehead all the way, that's the only way. It's not. Anytime anybody comes onto social media and says that their style is the definitive style, run the other way. Because when you come out and you say definitively that something is going to be one way or the other, you'll end up being wrong. You will end up being wrong. I don't care how loud. I don't care how obnoxious. I don't care how right you think you are. I don't care about your degree. I don't care about your profession. I don't care about how smart you profess to be. Okay. You will be wrong. All right. Now that's about 28 years of investing opinion provided for you for your viewing pleasure. Okay. Like it, don't like it. I don't care. Okay. The market is not one of those places that you can step into and say definitively, here's the right way. Here's what's going on. And, you know, to the credit and the constructive criticism that's being offered, I don't understand on these 250, 300 point down days where some of these YouTubers are coming on and they're doing live streams and they're talking about the end of the market. And it's like, oh my God, the stock market's down again. That sends the wrong message to people. It really does. And it goes against one of my strategic pillars that we're going to talk about next with strategy. But I want to get through this portfolio review here. This is one that I think I'm going to go ahead and absolve away. This went through a flash crash on Tuesday, $10,000 off the value of Bitcoin. I sold the night before. This just doesn't feel right to me. I'm not going to tell you that had any skill at all. Maybe a slight inkling of instinct, but I had been wanting to do it for a while. You guys can tell me I'm wrong. You can tell me I'm an idiot. That's fine. But I may look to go ahead and dissolve this account away. This is just not for me. If I become a multimillionaire and I can jump into Bitcoin at the right price, perhaps maybe it's something that I'll do down the line, but I just cannot see keeping thousands of dollars in cryptocurrency right now. That's just me. Okay. And I will probably be removing the iTrust capital off of the website, because if you're not a content creator, it's going to cost you $30 a month. I think that's a little bit too rich to subject your money to that much volatility. I do. So little change in heart there, but I think it's for the better. And I think you guys can appreciate the transparency there. So I'll be working on taking that profit, rolling it over. I bought into Bitcoin at 30. I sold when it was at 52. It's sitting at about 43, 45 before the live stream today. So, and I'm okay with that. You know, in hindsight, hell, with the luck streak I'm on in 2021, Bitcoin will probably shoot to $100,000 and I'll miss out on a truckload of money. Story of my life. Not going to lose sleep over it. I'm totally cool with my decision. Okay. The last thing I want to do is come onto social media and have people hear the message from me, misconstrue it as an opportunity that they think is more rich or lucrative than what they actually think. And then they get involved and it doesn't quite work out. Okay. And there's the total portfolio. I told you we were off about 6 from last week anyway. So for being such a terrible market, I can live with these results. Okay. We were at about $5.16 last week. We're down to about $5.10 right now. I think I can still buy a Big Mac with that. So I think we're all right. Look, the real takeaway is to understand that I don't feel any different this week. I'm not any more pissed off or happy this week. My life didn't change. I worked out more this week and did something good for myself. I'm still off coffee 4 weeks straight. Never felt better. Never slept better. Never felt better. I turned 44 on Monday. It was my birthday. So the kids took me out to Red Robin. A lot of fun, man. Life is good. Just brings me back to my point about how sacred life is. That's for sure. So be thankful for what you have. I get it. There was some volatility this week, but what does that mean in the grand scheme of things? Absolutely nothing. All right. Second pillar I want to bring to your guys' attention is strategy. Strategy can be split up into 2 different categories, the passive strategy and the active strategy. The passive strategy, I'm just going to make the decision for most of you guys, should be the optimal option to step into the market. I've been a passive investor my entire life. The bulk of my wealth is in passive investing. The irony is a lot of people want to tune into the YouTube channel, Independent Investor channel, and they want to hear about my Hyliion holding. And they miss the fact that I've got multiple layers of passive investing underneath of that Hyliion holding. Now, make no mistake, that is an investment of a lifetime. It could be life-changing. It could be, I don't know, life demoralizing. I don't know. I don't believe in that. We will stay true and make sure that the conviction follows through on the name. My point is passive investing first, entering into the market, buying the broader indexes, if that's what you want to do. I prefer ETFs. You can do it via ETF, mutual fund, index funds. You can do it in whatever capacity you want, but do so passively, where you just enter into those assets and you fund them up over time. You're buying into the philosophy of compounding interest. You're buying into the philosophy that your time has to work upon itself, and that time in the market is better than timing the market. Okay. So it doesn't matter what the market's doing week to week. Okay. Hate to come on and be the bearer of bad news, but this is the truth in investing. More people need to talk like this. And I would say that more people need to talk like this, but I think there needs to be a lot less followership on YouTube and a lot more questioning of what people are really trying to sell people on. Are they really trying to bring you on and watch the final half hour of the market close in the red to teach you what? To teach you what? If you can tell me what good comes out of that, man, I'll be better for it. But I just don't think there's any value, especially to the younger investors who see a down 300-day in the market. And I'm like, that's just another freaking day. No problem. And really what it comes down to as a self-directed investor is your sacred relationship with the stock market. It doesn't matter what Meet Kevin says. It doesn't matter what Jeremy says. Doesn't matter what Ryan says on the Independent Investor channel. What matters is your own personal conviction and your own personal acknowledgement to how important it is that your plan, your well-laid plan that you established with discipline, is going to put you into a better place into the future. That's the key. Okay. Don't let somebody like myself or any of these other big YouTubers or somebody who wants to come on and act obnoxious and yell in your face that you're somehow doing something wrong. None of that matters. It does not matter. At the end of the day, it doesn't matter. Okay. A firm is a bad investment. Really? It jumped 50%, 60%. It jumped another 30% on earnings today. Does it make it a bad investment? Those are the types of things that I fail to understand about criticizing other people's programs. But buying into the passive program can really help you. Then you can look to layer on that more active profile. Because as a passive investor, I talk to a lot of people who don't understand that they can buy the dividend growth strategy passively. This can make a lot of sense for people who want to get a little bit of exposure to some single stock element by exercising that passive strategy. And then the active strategy with more of a speculative palette can go ahead and branch off into that. Some options. I know All Good is really into options. I think that's fabulous. Why? Because it matches with her personality. It keeps her busy. I think it's fabulous. What better hobby would you rather get addicted to? I mean, I'm kind of addicted to drinking green tea now, but it works. You understand my point, okay? So that's it. Pillar number 2 for those things that people don't really want you to understand is to give you the acknowledgement or the wherewithal to pick your own strategy. It's a piece of cake. Don't make this thing more difficult than it needs to be. It's not that hard. It's not that hard. Starting an account and putting an S&P 500 index fund in there and maybe a small cap index, split it up 75-25. If you can't do that, okay, I just did it for you. But if you're not paying attention enough to where you don't feel comfortable with taking that step, give yourself some time. But that in essence is what you kind of need to do, is resonate with the strategy that you want to deploy. Once you come up with that strategy, the next pillar that people don't really want to acknowledge that people can determine for themselves is their own personal tolerance to risk. This is huge. My tolerance to risk to own a 𝗖𝐿s is different. In other words, I'm not going to be shaken from my position based on some morons in a Yahoo thread. You guys, if you follow me in there, most of my smart ass comments are really aimed at the morons in there who just go in there and offer equally no-brained opinions about the stock action every day. Doesn't freaking matter. It does not matter. But the real takeaway is to understand that if the stock goes up, I'm somehow a hero as an investor. If the stock goes down, I'm somehow a zero in the investment. None of those two things are true. The very fact is that I've chosen to walk this little bit more aggressive road to take on the risk to the downside and the potential to the upside, and I have the tolerance to deal with it. It's just that simple. Whatever strategic bucket that you choose, whatever strategy that you choose in your application, you just need to make sure that you're aligning the proper risk tolerance necessary for each of that bucket. You can't apply the same passive risk tolerance in your S&P 500 account, or especially the out of sight, out of mind 401k, and expect that you're just going to buy 1,000 shares of 𝗖𝐿lS and then expect that next week you're happy, right? In other words, you're not going to be able to just set it, forget it, okay, and expect that that level of diversification and protection exists on the single stock side of the house, because it doesn't. Baby, you own 100% of that position. Whereas the S&P 500, you own a piece of 500 companies. The total stock market index, you own 4,000 companies. Okay. You are protected by diversification, right? You are subjecting your money to risk, but let's be real. Look at how much of the market would have to fail before that entire ETF topples over. So you're putting your money into 3,784 companies rather than one. Requires a little bit different risk tolerance and application. It takes practice. Don't think that you're going to hit a home run right away. Give yourself a chance. That's why stepping into the market responsibly as a passive investor will help give you an idea of when something feels kind of uncomfortable and when you can actually look to take on a little bit more risk in your application. All right. The fourth pillar is your time horizon. This is pretty important. Once you understand that you have 20 or 30 or even 40 years to invest, well, then that can help allow the other elements to fall in line. So if you're 20 years old out there and you're looking at a 20, 30, 40-year investing time horizon, then that may help you sit back and say, you know what? I understand what Ryan's talking about. I understand the importance of passive. I understand the importance of kind of staying close to the vest, but I'm young, right? Is there anything prohibiting me from starting a little bit more of an aggressive bucket over here? There's not. And that time horizon really can help you understand what type of strategy to choose. And it can really help you take on maybe a little bit more risk tolerance, right? In other words, if you're asking yourself at 60, 70, 80 years old to take on a risk tolerance that's not conducive to a time frame that might be shorter than somebody who's 20 years old, then you're just being unfair to yourself, right? So if you can get that alignment of the time horizon, I think you'll be better off for it. And it can actually help with some of the other decision-making capabilities on how you define your own self-directed investing program. And the fifth thing I will mention, I've got to all 5 of my lesson points, and I'm very satisfied. Then I'm going to jump in and get to some comments because I never get to my lesson. Never. Fifth thing, people don't want to acknowledge. Make investing yours. Make it personalized. Make it personalized. 10% cash on the side. You go into a financial planner, they're going to want it all. You want to invest in single stocks, they're going to discourage you away from it. You want to invest in low-cost ETFs, index funds, they're going to talk you off of that, and they're going to talk you into the mutual funds. Why? Because the program and the structure that they have is aimed at taking you as said customer in-house and ensuring that the financial planning institution benefits from your relationship. This whole bull crap of you do better when we do better, it's a con, guys. Okay. I'm one to dispel the notion and just think that the word fiduciary is complete bullshit. It's complete bullshit. It's just absolute garbage. Nobody in this life is worth trusting more than you. Okay. Not me, not anybody on social media. Hell, I would go so far as to say that most of your family and friends really have their head up their backside in most capacities, and especially this one. Trust yourself. Trust yourself. Okay. The very access that I talk to the market, the very sacred relationship between you and the market, the very sacred relationship that I have with my TSP will not be deferred. My very relationship with as a retail investor. to have 11,750 shares of a startup company that I have conviction on, I don't give a shit about all the noise. I don't care about a Yahoo thread. All I care about is the sacred nature of that relationship between me, my wealth, and what the potential is of that wealth for me and my family. All the distraction, it doesn't matter. That's the personalized element. That's the element of walking around with your head a little bit higher because you indeed know more than the next person. And I'll bet you do. I'll bet you're smarter by tuning into the Independent Investor channel. We look to empower one investor at a time. There's 62 people in this message. I would give this live stream with the same passion, the same intensity, the same consistency if there was one or two people in here. Bob and All Good, they know I would. They know I would. But there's 62 people in here right now, and they're hearing a message in understanding that it's okay. It's okay to relate with the idea of taking charge for yourself. Stop giving away the farm. Stop giving away all your good ideas. Stop allowing yourself to be subject to giving your ideas to somebody and only having them shift your ideas and not hearing you out and putting you in their agenda, not yours. Okay? The only thing that matters in this life is your agenda. I don't care if you make mistakes. I don't care if you think you don't know it all. I don't care if you think that you have to be an analyst to succeed in the stock market. I don't read balance sheets very often. Okay? I don't need to. Okay. I've garnered over $500,000 of net worth just being a value investor and adhering to a disciplined plan in my application. You can do just the same. There's nothing that I do that is extraneously unique. There's nothing that I do that you can't do. There's nothing that I do that I don't openly share through the social media experience. That's the beauty of it. Now, would it be different if I came on here and said I lost $500,000, but I still believe in my idea? Probably not. I demand results from people. If you want to come to the table with some convictions, you need to show me some results. And by God, dare I say, maybe you should show me some results that's been rendered beyond 10 years of investing. Then come talk to me. Not within a bull market, but through multiple downturns, through multiple corrections, through multiple bear markets, and the ability to hold true to your program, that means something to me. You do that to me, and you have earned my credibility. And hopefully we get you to a point where you've earned your own credibility and you can hold your head high knowing that what you do works. Because this stuff, it does work. 1,000 different ways to end up in a successfully financially successful situation in your life. I just show my very unique way of accessing the market in the capacity that I do. Hope you guys appreciate that. All right, guys. Cruise to the bottom here. See who's in. Rebecca's in the house, man. Fantastic. It's great to see you. So many empowered investors. Six-figure investor. Absolutely something to be proud of. They're out there. They're out there. And wealth is not in the form that you would think that it is. It's not. If you looked at me out on the street, man, I typically have my outlet clothes on that I just paid $12 for on discount, I might add. And you'd never know the level of wealth that I have. Why? Because we as society want to stereotype everything. We want to say, no, this person over here has a lot of wealth. Therefore, we should follow them as a beacon of hope and light. No, I just don't believe in that. You're your own beacon of light. You're special. Take it. Be the best version of yourself that you can possibly be. Do it. Don't do it because I told you so. Do it because you want to. That's the key. All right. Click it. Click it. Click the down like. I don't care. It's no big deal. I just am happy that YouTube gives me the technology to reach out to people. Yep. I use it and I abuse it. For you guys that don't appreciate the promotional videos that I do, that really gives me a financial boost to help support some of the other initiatives on the channel. But if you do enjoy the content on the live stream, a payment to me would be to kick on there and help me support that. I don't do that to piss you guys off. I do that for the money element because I did this channel for a long, long time without any money. And I didn't start it for money. I didn't start this for fame and claim. I didn't start this to do anything other than to put out a word that I was passionate about and that I knew worked. But that small element came to my into my wheelhouse, and I never would have expected that that opportunity would be made possible by what I have online through basically an online resume on the Independent Investor channel. And people can tune into my video and say, damn, you know, this guy does speak from the heart. You know, let's segue this into an opportunity. And by God, you put that type of effing money in front of me, I'm going to take it. Okay. Yep. Sell out. Yep. You're a sellout, Ryan. Yeah, I just beg to differ, man. I beg to differ. There's nobody like me. Nobody can deliver the live stream like me. You're not going to hear another live stream like me. A lot of people have said, oh, everybody says that. Bullshit. Try to find a live stream like mine. You won't. You won't. It's the only live stream I watch. Every now and then I kick over to Kyle's and Matt's to help them support their project because they're hustling just the same. And while a lot of people are sitting on their haunches, being ass backward lazy in this life, we work with a sense of urgency, and that I respect. And I would just ask that some level of mutual respect is pushed through the Independent Investor channel for the multiple ways that I'm pushing through content. Some of the legacy ways of pushing through content don't make me a dime. Don't make me a dime. So those lucrative elements, I would expect that some people, the very few who have said, hey, Ryan, good job, congrats, would be in order. Do you think I get that all the time? Hell no, not in this society. No way. We want to piss on success all the time. We want to be pissed off at people who advocate for success. We want to piss on people who come on and try to help people put out a message that actually works. You know, if I came on and just yelled and screamed at you, you know, like an idiot and just sold out, hell, I would probably take off on YouTube. I don't know. All right. But I do have a level of integrity, and I'm very, very scrutinizing with the projects that I take on. But that is an opportunity that I will run to ground. There's no doubt. Very hungry. I enjoy doing it, so why not do it? All right. Peyote. I like peyote. Penny royalty. Fantastic. I saw one of Kurt Cobain's last interviews this week. It was pretty awesome, man. Guy was legit. He talks a lot along the lines of what I do about what he sees being unfortunate in life. Really, like most people disappoint the hell out of me. They do. It's just because I don't sense that people run quite at the sense of urgency that they need to. Life's a gift. You never know if you're going to die tomorrow in 10 years or if you're going to live a long and prosperous life, that of which I wish you all the best in. Okay. But life is a gift. Make it happen. All right. Yeah. I hope so. I don't want you to come to the channel for any other reason than you like me. Okay. You can disagree with my investing style. No problem. You can hate me. I don't want you on the channel. I want you to come on the channel because you can feel like after 60 minutes, you can step away and say, okay, well, that was not typical YouTube. That was not. He didn't script that. I'm pretty sure I was watching his eyes the whole time, and there wasn't a whole lot of this going on. There was a whole lot of this talking right to you, giving the goods, telling people what they need to hear. I'm going to cruise up for the last few minutes of the live stream anyway. Try to hit some of these military discounted as they use the word offered. Sorry. It's a cool project. It's not going away. He's talking about the investor group. It's a lot of fun. I've held off from charging the group that's in there now because I just have a lot of fun with it. But I think it will kind of come to that here shortly because I do pay for the website myself. That comes out of my pocket, and I just monitor and see kind of how things roll out. I'm very, very careful with balancing the value to the cost and whether or not it's worth it to roll those projects out. But I'm very, very careful when looking at evaluating the status quo within my business. And I know there's people in there that really appreciate it and they feel like they're part of a family. And they are. It's a very, very special WhatsApp group. I really like it, man. You know, Jamie's my brother from another mother. He's a Viper in the group. He would attest to this. We were just having a discussion before I came on live. That's the connection and comms piece that I do provide a lot of value on. It's just one of those funny and fickle things in this life. Nothing's for free. And I think that the irony in that is that a lot of people expect a lot of stuff for free. Mm-hmm. Mm-hmm. I do my fair share of giving away the goods for free, guys. You just got to listen. Okay. That's all I ask. That's a prerequisite of coming on the channel. Very, very simple. Okay. Decided to dip my toes into SMG. Very good. There was that discussion, Adrian, going on before the show tonight. Very cool. VOO is dominated by big tech. I'd rather choose my stocks. That's a good point, Bob. It's a good point. I do own a little bit of VOO, but I own it in scale. Okay. It's one of those things that it makes sense for my wife to have as an anchor within the Roth IRA. I don't think there's any better of a flagship product than VOO in representing the S&P 500. And I've seen it perform very, very well. That's the problem, is that when the market decides to take a hiccup, these indexes they'll suffer. Stocks go down. And it'll be the shining light that I provide on YouTube as well to say, you're still all right. You're still doing fine. You're still exercising. You're still eating. You're still doing the live stream, Ryan, right? Good job. You're still fine. And it's that separation of perspective and not getting emotional about your stocks. Jesus. Why do we keep like digressing and falling back into like habits that we all know are bad habits to fall back into? Really are. Just separate. Don't even look at it if that's what you need to do. I don't care. Do what you got to do to get the hell out of your own way. You are your own worst enemy. Okay. Find a little discipline for yourself. I don't know. Maybe you've never been disciplined in your life. I don't know. Punch yourself a few times. Watch Fight Club. I don't know. But teach yourself a little bit of discipline, man. You got to figure it out with this investing opportunity. That's the way. On a pullback TQQQ. Yeah, so the Qs I own in mine, I really like it. Matt really likes the triple leveraged. It really works for Matt. Really does. You know, and it just speaks to the different style. It really, really contributes to the conversation. You know, Matt's got products right off the top of his head, just like I do, to offer to the group. And it's really a lot of fun, Matt. Thanks for offering. Certainly, you know, I'm really not in the pullback camp. I'm really not. We'll wait till the market really comes off. I think it sees below 30 before it sees 40. We've just ran up off of this pandemic low. COVID has really thrown a big monkey wrench into the stock market. Stock market does not know how to react. And we're in some interesting times right now. I'm going to continue to be long the market. I'm going to continue to fund the market. But as far as being aggressive on establishing big positions in new stuff right here, I'm not. I'm good. I'm happy. You know, I'm happy with the projects and some of the income streams that are coming in. All that stuff goes to cash. Like, I'm not using that to buy outside of my DCA schedule. Okay. So if you just kind of listen to me, you can understand maybe how I'm taking a little bit more of a defensive posture. When it's time to be offensive, I will. But I've been in defensive mode most of 2021. You know, it's been relatively a fairly poor year. And I think a lot of that has to do with the underperformance of my speculative portfolio. We'll be fine. It is what it is. I'm reporting to you real time in the short term. Doesn't matter what I say now, where Hyliion goes into the future, or SoFi, which I'm very bullish about. My long calls on Wish, those are going to materialize and they'll be fine. Okay. Some of the other speculative positions that I've got, they'll be fine long term. They're just not good right now. What can I say? Truth hurts, I guess. I don't know. I don't get hurt by the stock market, man. I really don't. Tom H says, hey, Ryan, fingers crossed for a bigger dip. Maybe. What sectors of the market would you be looking to add to here on a further dip? I like healthcare. I like materials. I like industrials on a dip, although they've come off fairly heavy. But you know, I buy all the sectors at the same time. And I think I try to avoid the zigzag game, because if you try to pick the right sector to add to, I think you end up zigging when the market zags. That's why I own them all. I own them all in the capacity that I do in that smaller $20,000 portfolio with M1 Finance. So I own them all. right? So if technology does sell off a little bit and it rotates down to the bottom end materials, maybe even some energy. I mean, energy's just been forgotten, just forgotten, you know? And those fund flows will go back in there. I've always liked financials. I like them all. I think if there is going to be a rotation, it will be in tech. Um, I hope I'm wrong in some of the individual names that I'm very bullish on. Salesforce.com, Microsoft, Apple, Google came off today. I mean, if you were looking for a dip in Google, I guess on a one day, that was today, right? Amazon's always a buy. It never gives you an opportunity to buy it. It just recently did when it hit 32 and nobody talked about it. So, to each his own, pick your poison. I think Facebook is still undervalued here. Facebook is still a relatively new company, at just shy of 400 a share, it's undervalued. So all kinds of different opportunities. You just need to pick your poison, whether or not you want to buy the sectors, to your point, buy all the sectors, buy a total market, or buy individual stocks out of each of those individual sectors. I think healthcare's come off a little bit. It's always been one of my favorites. I like financials. I like materials a lot. And then industrials have already come off a lot. And industrials is one of my favorites as well. Okay. That's a good question, man. Very cool. Wonder how hard it would be to become a financial advisor at this point. I just wouldn't want to. There's too much of a difference, black and white, from what I'm trying to advocate for. And, hey, I'm not on here for entertainment purposes. Go do your own homework bullshit. It's just like, I don't understand why that industry is so protected, for somebody who's 21 years old. I don't know squat about financial planning, but I just ran through an 8-week course and I have my master's degree in finance. Then I have the ability to sit down with somebody who's built up and amassed a fortune and somehow know the stock market and have the experience necessary to sit down and give the best recommendation for you. Come on, guys. I mean, most of you guys agree with me on this. I'm preaching to the choir. Good grief. But you expect something good to come out of that transaction? Oh my God. Jesus Christ, let it go, man. Holy smokolies. They have trained that young girl or gal or guy to sit behind that desk and run you through a corral. That's what they have trained them to do. That is the industry. So I'd like to think that it's somewhat harder. I don't know. I don't really care. I despise the industry. I despise it. I chalk it up as modern day highway robbery, and I have my very, very specific reasons for that. How does Edward Jones make 30 billion for doing absolutely nothing every single year by sitting on their amassed $1 trillion of assets under management? If you can answer me that and say, Ryan, they earned that money. Bullshit. Get out of my face with that. That is garbage. All right, let's cruise up the roll here. Got a couple minutes. A ton of people in the group here, man. Good support. It was a good, robust live stream. I do apologize for my soapboxes. I couldn't get a whole heck of a lot in on the group here. It's really nice to see Dave, man. Very cool to see Dave. I saw him and Jerry on a live stream this week. I popped in for just a little bit. Nice to see those projects are blossoming. Very cool. We're all looking to grow our messages in one capacity or another. And it's really nice to see the community grow. You guys are all VIP, man. You guys are all part of the independent investor community. But I really want you to be very, very crystal clear on this fact. Your involvement in this community is predicated upon the success that you can garner for yourself. Okay. It has nothing to do with the value that you put on what you hear from me and that you can apply and somehow attribute back to me because you heard it here. It has nothing to do with that. It has everything to do with your ability to separate from what you were predestined to achieve in life and how you've been able to separate from that predestined path and accelerate your path and separate and expand upon that path to personal finance and personal financial freedom for you and your family, guys. So with that, we will be back in 2 weeks. All right. I'm taking next Friday off to take the little fella to Friday Night Lights. Wish you guys all the best. Please heed my ask of you. Take a few moments in reflection of 20 years after tragic accident 20 years ago on 9/11, please. And you guys be safe, be well, appreciate what you have, and we'll catch you back on the Independent Investor Channel live stream in 2 weeks from now. Guys, take it easy. Have a great, great weekend.